And where does that lead Bitcoin's eventual price?
My 21-year forecast is for Bitcoin to appreciate about 29% a year.
More on that later in the video. This is the Phantom speaking. This channel is where we explore everything about cryptocurrency, blockchain, and the future of finance. Let's break it all down. But before we jump in, don't forget to smash that like button, subscribe, and turn on notifications so you never miss our latest updates on crypto trends and insights. Let's get started. Bitcoin. It's the world's first decentralized digital currency, and it's no stranger to controversy, innovation, and global intrigue. While adoption is growing worldwide, two key players, Russia and China, are making waves in ways you might not expect. Today, we're diving deep into the fascinating and sometimes contentious role these two countries play in the global adoption of Bitcoin. Bitcoin adoption has surged over the past decade. Countries like the United States and El Salvador often make headlines. But what about the world's other powerhouses? Russia and China are taking unique approaches to cryptocurrency, and their actions have ripple effects across the globe. But before we talk about Russia and China specifically, let's quickly break down the global adoption landscape. Bitcoin is being used as a store of value, a hedge against inflation, and even as legal tender in some countries. Yet the story becomes even more complex when we factor in geopolitics, economic strategy, and national regulations. Okay, let's start with Russia and their strategic potential amid sanctions. As one of the largest economies in the world, Russia's relationship with Bitcoin is complicated. On one hand, the country has been slow to embrace cryptocurrency as legal tender. On the other hand, recent global sanctions have forced Russia to reconsider its stance. With sanctions limiting access to traditional financial systems, Bitcoin and other cryptocurrencies offer Russia a way to bypass restrictions. The government is exploring crypto payments for international trade and recently passed laws to regulate mining operations. And let's not forget about Russia's massive energy reserves. With cheap electricity and cold climates, perfect for cooling mining rigs, Russia is uniquely positioned to dominate the Bitcoin mining industry. In an article recently published in Reuters, Russia is using Bitcoin in foreign trade, finance minister says. Russian companies have begun using Bitcoin and other digital currencies in international payments following legislative changes that allowed such use in order to counter Western sanctions. Sanctions have complicated Russia's trade with its major partners such as China and Turkey, as local banks are extremely cautious with Russia-related transactions to avoid scrutiny from Western regulators. Now, this year, Russia permitted the use of cryptocurrencies in foreign trade and has taken steps to make it legal to mine cryptocurrencies, including Bitcoin. Russia is one of the global leaders in Bitcoin mining. This is something you should definitely take note of. Earlier this month, President Vladimir Putin said that the current U.S. administration was undermining the role of the U.S. dollar as the reserve currency by using it for political purposes, forcing many countries to turn to alternative assets. He singled out Bitcoin as an example of such assets, saying that no one in the world could regulate Bitcoin. Putin's remarks indicated that the Russian leader backs the extensive use of cryptocurrencies. Now let's turn to China, where the story takes an unexpected twist. In 2021, China banned Bitcoin mining and trading within its borders. This sent shockwaves through the crypto world, as China had been the epicenter of Bitcoin mining. But banning Bitcoin hasn't stopped its influence. Despite the restrictions, reports show that underground mining and trading activities continue in China. In fact, some estimates suggest that China still accounts for nearly 20% of the global Bitcoin hash rate. So why ban Bitcoin? The Chinese government has two main reasons: maintaining control over its financial system and promoting its own central bank digital currency, the digital yuan. But here's the irony. Bitcoin's decentralized nature makes it nearly impossible to ban outright. So let's compare Russia and China. There are similar goals, but different strategies. Russia and China share a common goal: reducing dependency on the US dollar. But their strategies couldn't be more different. Russia sees Bitcoin as a tool for circumventing sanctions and boosting trade, while China aims to suppress it in favor of its digital yuan. Both countries recognize the power of cryptocurrency, but their approaches reflect their unique geopolitical and economic goals. And here's the kicker: these strategies could reshape how Bitcoin is used on a global scale. And there's a ripple effect, what it means for the world. The actions of Russia and China are setting precedents that other countries are closely watching. Whether it's for economic independence, regulation, or innovation, Bitcoin is becoming a key player in the global financial system. For example, Russia's push to use Bitcoin for international trade could inspire other sanction-hit countries to do the same. Meanwhile, China's focus on a state-controlled digital currency could challenge the very concept of decentralized finance. In recent news from Forbes.com, Billy Bambro reported that leak reveals serious China 2025 warning, predicted to blow up the Bitcoin price. The Bitcoin price limped into 2025, struggling along with global stock markets. Despite wide speculation, China could have beaten Donald Trump and the US to creating a Bitcoin reserve. Now, as traders focus on a looming key date for incoming US President Trump, a leak has revealed China's central bank is scrambling to contain a fervid bond rally as it gears up to deliver a stimulus bazooka. China looks to create a 10 to 30 year window in government bond yields, and this will help central banks likely cut interest rates from their current level. China's efforts to boost its stalled economy have been seized on by Bitcoin and crypto market watches as a potentially bullish catalyst heading into 2025. China is on the edge of collapse, and their 10-year bond is a reflection of how broken their economy has become, an anonymous economist posted to X, predicting China will be forced to ease its monetary policy in 2025. The country has to ease it, or it's game over. Even though the liquidity will not help, it will boost other markets like Bitcoin as capital continues to flee the country, and based on renewed and incredibly misguided optimism. Last year, Arthur Hayes, a co-founder of Bitcoin and crypto derivatives pioneer BitMEX, went on to set up the Maelstrom Investment Fund, predicting a China bazooka combined with the Federal Reserve easing will create a glorious Bitcoin and crypto bull market in 2025. Here's Michael Saylor, recently speaking on CNBC about the potential of Bitcoin.
Joining us is MicroStrategy co-founder and executive chairman Michael Saylor. Well, you're the guest of the moment. So is there a limit to how much Bitcoin you're going to acquire?
No, I've said we'll just keep buying the top forever. Every day is a good day to buy Bitcoin. We look at it as cyber Manhattan. I would have bought Manhattan 100 years ago, 200 years ago, every year for the past 300 years. You pay a little bit more than the person that bought Manhattan before you, but it's always a good investment to invest in the economic capital of the free world.
Do you think that Trump is serious about creating this Bitcoin reserve, and how would that work?
I think he is. And, if you think about the Louisiana Purchase, California, and Alaska, we paid $40 million to buy 75% of the United States. Nobody remembers the $40 million. But if you know where the money's going, you should buy the property, buy the future. And in this case, the Lummis plan calls for 1 million Bitcoin acquisition. That's worth $16 trillion to the country. RFK proposed 4 million Bitcoin that would be worth about $56 trillion. There's room for Trump to go beyond that, even $81 trillion in gains. And that's against $36 trillion in the U.S. national debt. So all the capital outside the U.S. and all of the antiquated 20th century capital is going to flow into digital assets. It's going to flow into the Bitcoin network. And the logical thing is for the U.S. to buy it now and own the future.
And just chase it up at any price?
I think just a progressive acquisition of it makes sense. Keep in mind, if you bought Manhattan from 1650 to 1700 a little bit every single year, it would have been a good acquisition. Right now, we can buy, the United States could literally buy 25% of the Bitcoin network, either by trading out its existing gold stores or just by borrowing a small trace amount of money. And so the Bitcoin network's going to go up by a factor of 100. You might as well buy it before it 100x's.
Your Manhattan analog is really interesting, Michael, because the reason it would have made sense to buy Manhattan is because they agreed it's going to be on a grid going north. And I wonder if you see similar policy analogs right now in crypto. Are we that organized?
You know, the world wants a digital assets framework, and the United States has a great opportunity to define a digital assets framework. We need to define the definitions of a digital commodity, a currency, a security, a token, an NFT, and an asset-backed token. And we need the rights and responsibilities of issuers and the exchanges and the owners. But that takes consensus from the executive branch, the House, the Senate, and the industry, and we didn't have that for the past 4 years. The opportunity for the U.S., it's to issue $10 trillion of digital currency and back the dollar. It's to capture $50 trillion of capital gain on the digital capital network. And I do believe with the digital assets framework that this administration could put forward, there's no reason why we won't see $500 trillion of assets tokenized over the next 21 years and $280 trillion in capital flow into the digital capital network that is Bitcoin.
And where does that lead Bitcoin's eventual price?
My 21-year forecast is for Bitcoin to appreciate about 29% a year, ARR, to $13 million a coin by the year 2045.
So where does this leave us? Bitcoin isn't just a cryptocurrency. It's a tool for innovation, a weapon in economic strategies, and a symbol of financial freedom. Russia and China's actions remind us that adoption isn't just about individuals. It's about governments, policies, and the global economy. So what do you think? Will Russia and China's approach to Bitcoin reshape its future? Or will decentralized finance find a way to outpace them? Drop your thoughts in the comments below. And don't forget to like, subscribe, and hit the bell icon for more deep dives into the world of crypto and finance. Thank you for watching. Phantom will see you in the next one.